Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com on a Friday. This is the 27th of October. Yeah, we're ending the week. Actually, a little surprised we didn't get bigger selling on the week as we come into the weekend with things, fragile situation in the Middle East, especially now that we hit Syria, as you know. And probably the ground incursion, probably who knows when. Obviously, they're not going to tell us, but if it does happen over the weekend, I think that could create some volatility. This could be also a signal that perhaps a lot of the bad news is baked in. Oil didn't rally today, gold didn't rally, but that doesn't mean anything. That means that people are probably maybe already anticipating a lot of that, and maybe the price is already built in. Remember, markets are forward looking. So in any event, we'll get into the charts in a second. I want to mention I do have a class coming up this coming Thursday. We are getting, this is the theme I wanted to bring up is when markets get mispriced. What that basically means is, you overshoot. We had that with utilities last couple of weeks. If you took advantage of that, I know we did in TTS. Take a look at stock like NEE, and that's what I mean by mispricing situations. We've had opportunities like that, and we're still getting some more of some of these stocks that are just getting beaten up, or some of these markets that are getting really stretched out. So I'll talk about that next Thursday. If you want to join me for that class, it's going to be at 11 Pacific. It's going to be a daytime, so we actually have a chance to look at live charts. And it's going to be right in front of the Apple earnings too, by the way, Thursday after the close. So it's going to be an interesting day. So join me for that. It's a free class. Sign up below with the link. I'll be tweeting about it. Okay. All right. Let's get into the charts and check it out. Not a lot really. So I want to start with the NASDAQ, and obviously Amazon. We had a whole. We had Meta, Microsoft, Google, and Amazon all report. Initially, Microsoft did rally and then gave it all back, or just kind of meandered. Amazon today did hold on to the gains, which is really interesting. Now, we're looking at the NASDAQ chart, and again, everybody's super bearish right now. But if we put things in perspective here, and yes, of course, we've been selling off, but the pattern has been a week or 3 days of massive just chop consolidation, a leg lower, and now we're back to this, right? So this leg lower, which came from the miss in Google and so forth, and rates again jumping and all that, whatever you want to call it, has basically now, since Thursday close, we in fact are holding above yesterday's low, and essentially just kind of chopping around in here. So you can see this has been the sequence for the last, literally for the last couple of months here, or since October. You can see this huge choppy trading. Then we get a leg, a bait, and then we get all this. In fact, we rallied all the way back up here. So it's been, unless you have the mental capacity to sit through these 300-point pullbacks against you, if you're short, you're fine. Obviously, shorting at these rallies has been much more productive. And today, or the last couple of days, it's just been really, really choppy. Been very, on a short-term basis, been very difficult to trade, provided you're already short and could hang on to, 300-400 point swings against you, you're fine. So I just want to bring that up in respect to everybody telling you how much money they're making shorting, the market right now, right? That's the reality, right? Again, if you took a short up here at the gap and got out over here, you're fine. But again, but we know how that looks long term if you keep doing that. So Just want to make sure you understand that. Okay. All right. Now, also the S&P is actually much weaker than the NASDAQ. In fact, similarly, we had all this chop, and again, very choppy here. Had that leg down again. This has been the sequence. Even here, we had a big strong rally, went sideways for a week. So that is been the sequence. It hasn't just been a straight leg down. Again, selling rallies has been the better play, and in fact the S&P has actually worked a little bit better. If you know that spike came in the pre-market after the I believe that was after Google or Microsoft, or I think it was Microsoft got you that little spike up here up into that level there, and then it's been, we had that leg down, and then similarly get any chop. In fact, looks like we're going to close right not even 10 points below that low right there. Okay, so just again, what got hit today more than anything really was the Dow, believe it or not. Why? Because again, 30 stocks, and we have Exxon, Exxon got hit, Chevron got hit, so a lot of the big blue chip stocks, bigger price stocks in the Dow got hit, and therefore you got that bigger sell-off in the Dow. So that was interesting. But again, Dow's a whole different animal. It's only 30 stocks, price weighted and all that. So perhaps we got a level coming up here in the Dow. But yeah, because of the composition of the Dow, that's where you got the most pressure. Also, Russell, again, just kind of meandering lower, not really seeing a washout. The VIX hanging around 20 is really interesting to me, because I thought, I wrote this morning in our market overview that we perhaps have to have another sharp spike in the VIX to maybe put on that durable low, or, who knows? It's going to be, again, with next week's Fed meeting, as we know, that's always going to be a market mover. That paired with, with Apple following the next day is going to be really, really interesting. But all in all, again, I think markets just kind of trying to figure things out. Very, very kind of convoluted, lots of cross currents, as we know. Rates did come off, so let's get into rates here. The safety trade, I was looking for a little bit more of a spike in oil, maybe more sell-off in the S&P. But one thing that did actually reflect what's going on in the Middle East, I believe, is bonds. This is the 10-year did come off a little bit, so there was a little bit of a flight to safety in regarding this weekend. That was the only market that kind of reflected that. And then, but not really dramatic. You also have, still have to have these resistance levels broken in order for us to get a meaningful pullback in rates. 10 years, it looks like it might be setting up. It's holding here on our level I've been talking about. If you go back and look at the previous videos, I've been talking about this big weekly level in the 10-year. It goes all the way back to 2007. So far, it's been holding, and if we can take out that high, then I think we got a shot at possibly 108.16 on the 10-year. Dollar not really showing any signs of movement here. We got Bank of Japan next week, which I think is going to be the big one. Bank of England also, but nothing new, not even worth talking about anything. The Japanese yen also rallying. That's going to be, I think, the big one next week. Gold, as I mentioned, not much of, we did at the very end here, we got a little bit of a spike, which is not surprising. So it came right at the very end here on gold. So this is, again, probably, again, the safety trade going into the weekend. So we get caught a little bit of a bid, but still really haven't broken any significant levels. You can see we spent most of the week also just chopping around in gold. So this is probably, again, that safety trade. And it literally just happened, let's see, in the last, right in the last hour. So this is symptomatic of people positioning for possible situation in the Middle East, I believe, right? It just came right in the last hour. You can see that nice little pop here in gold. Everything else, really, oil chopping around. That was surprising. That didn't rally. Nat gas did have rollover and it's pulling back, so there's not anything new there. We had a little pop coming from the inventory numbers and gave it all back. I'm sorry, that's nat gas. Grains, nothing really to talk about. We are in some energy. We are in energy. I mentioned this week we were in NEE, Nextera, DFS. We put on a position in Valero. That's also working a little bit, not so much yet, because even a lot of the stocks today just kind of meandered about. All the energy shares, because of the miss in Chevron and Exxon. XLE, interesting, is right back down again. So this has been, I think, baffling to a lot of folks. Again, this is why if you chase these energy stocks, you can see XLE, which is a big energy. This is the energy ETF. Has given back almost 10 points from the peak when everybody got very bullish again on that. So still interested in buying XLE. We are actually short Valero with some puts. Okay, we did actually a volatility play on that in front of the earnings. And so we have some exposure to energy shares on the short side for now. So we'll see how that goes. Other than that, obviously, again, very interesting, fragile situation in the Middle East. Who knows? We hope that it doesn't become anything. Obviously, nothing going on there is good, but we just hope it doesn't get worse. And that will probably, coming into the weekend, if it doesn't deteriorate, I think we just pick up where we left off. But again, aside from that, which is just another added kind of component to the risk factor here, Fed obviously huge next week, and just a whole slew of earnings as well to look at next week, which is where the opportunities are coming. That's where we're spending a lot of time in TTS, taking advantage of some of the earnings situations there. So, all right, everybody, have a great weekend, and remember to move your clocks back this weekend, which means we're going to have darkness coming sooner, and but that's okay. You guys like the winter time. Okay. All right. Have a great weekend. Again, give me a thumbs up and make sure you sign up for the class if you're interested. I will be doing that during the day, so maybe we'll talk about some stuff going on intraday. That's the day of the Apple earnings too, by the way. So sign up for the class if you want to attend that. It is a free class. Okay. All right. Have a great weekend, and we'll talk to you next Tuesday. Take care.